Hello, and welcome back to Alpha Index, the channel where we explore not just the mechanics of money, but the hidden wisdom behind true wealth. Today, we're going to deconstruct the investing mindset, looking at how you can transform a single $10,000 lump sum into a foundation for financial freedom. This isn't about market timing or hot tips. This is about building a mental and financial framework that will serve you for life. For many, $10,000 feels like the first true milestone. It's more than just a number in a bank account. It's the first tangible proof of discipline and a testament to your ability to delay gratification. In a world where immediate reward is the default, having 5 figures in your possession is a quiet, radical act. It signifies that you have bent your will to a greater purpose, and now it's time to put that purpose to work. This isn't just about growing your money. It's about growing yourself. Pillar 1. Fortify your foundation. Risk level 0 to negative. Before you can build a skyscraper, you must lay a concrete foundation. In finance, that foundation is about eliminating liabilities that drain your energy and resources. The first and most powerful investment you can make is paying off high-interest debt. Consider this. Every dollar you put towards a credit card with a 20% interest rate is a guaranteed tax-free return of 20%. You will not find a more certain return on any stock chart. The stock market, on average, has historically returned around 8–10% annually, and that comes with volatility. Some years you're up, some you're down. But when you pay off that debt, the return is absolute, unchangeable, and immediate. It's not flashy, but it's the purest form of wealth creation. You are quite literally making money by stopping the bleeding. But the foundation extends beyond debt. It's about building a fortress of peace of mind. That's where your emergency fund comes in. It's the moat around your financial castle. Most people recommend 3 to 6 months of living expenses. Think about what this provides. The freedom to say no to a toxic job, the resilience to weather an unexpected car repair, the peace of mind to focus on your long-term goals without the constant fear of a setback. This cash isn't for growing, it's for protecting. It's the insurance policy that keeps you in the game when others are forced to sell their investments at a loss. It's your personal margin of safety, a concept the legendary investor Benjamin Graham championed as the core of intelligent investing. This is the bedrock of your financial life, and its value far exceeds any return you can measure on a spreadsheet. Pillar 2. Embrace the power of the whole. Risk level, low to moderate. Once your foundation is solid, you can begin to build. The second pillar is about participating in the collective genius of the market, not by trying to outsmart it, but by riding its long-term tide. This means investing in well-diversified index funds and ETFs. Think of it this way. Instead of betting on a single horse, you are buying a piece of the entire race. An S&P 500 index fund, like VOO, instantly gives you a fraction of ownership in America's 500 largest companies. You don't have to pick the winners, because you own a piece of them all. You are betting on the enduring human spirit of innovation, on the relentless forward march of commerce and technology. This is the philosophy of passive investing, a strategy built on humility and patience. It acknowledges that consistently beating the market is a fool's errand, but joining the market's long-term growth is a sure path to prosperity. The most powerful force in the universe, as Einstein supposedly said, is compound interest. With an index fund, your returns begin to earn their own returns, creating a snowball effect that is slow to start but becomes unstoppable over decades. Remember, wealth is the result of time in the market, not timing the market. This is the part of the journey where you set your course, trust the process, and let time do the heavy lifting. Pillar 3. The search for alpha. Risk level, moderate to high. After securing your foundation and establishing your core passive holdings, you now have the psychological and financial bandwidth to engage in the third pillar, the search for alpha. Alpha is the excess return an investment generates above a benchmark. This is where you might consider individual stocks or other more speculative assets. This isn't about gambling. It's about a deep, rigorous pursuit of knowledge and understanding. It's about finding a company you believe is undervalued by the market. This is where you become a detective, not a speculator. You read annual reports, study earnings calls, analyze leadership, and understand the competitive landscape better than most. You are looking for a gap between what a company is currently trading for and what you believe its intrinsic or true value is. This is the philosophy of value investing, made famous by Warren Buffett and Benjamin Graham. However, a critical distinction must be made. This is not about going all in. A key principle here is diversification, even within this riskier bucket. Never risk so much on a single company that it could ruin your entire portfolio. An intelligent investor might allocate a small, considered percentage of their total capital to these opportunities, with the full understanding that the potential for outsized returns is balanced by the very real possibility of loss. This is the stage of investing that requires not just conviction, but also intellectual honesty and the humility to be wrong. Pillar 4. The strategic reserve. Risk level, low. The final pillar is less of an investment and more of a strategic holding, a high-yield savings account or treasury bonds. This may seem contradictory to the goal of wealth building, but it serves a crucial purpose. This money is your opportunity fund. It's the ammunition you hold in reserve for when the market inevitably presents a rare, asymmetric opportunity. This cash isn't sitting idle. A high-yield savings account or a short-term treasury bond provides a respectable return while maintaining liquidity. It's a place for funds that are earmarked for a specific goal, or simply for capital you want to deploy when the time is right. This cash gives you the power to buy when others are selling in a panic, to be a contrarian when the herd is running in the opposite direction. It's the ultimate expression of patience and discipline. Ultimately, your journey to financial freedom won't be defined by a single trade or a stroke of luck. It will be defined by the principles you follow. It is about shifting your mindset from a consumer to an owner, from a speculator to a builder. It's about understanding that money is a tool, not an end in itself. So, go forth and build. Start with the foundation, add the core, and then, if you choose, seek out the alpha. Your $10,000 is more than a starting point. It's the first step in a lifelong journey of self-mastery. If this message resonated with you, and you found value in these principles, please give this video a like and share it with someone who needs to hear it. And for more content that goes beyond the surface of finance and into the deeper truths of wealth, be sure to subscribe to Alpha Index. Thanks for watching, and I'll see you in the next video.